The hotel industry is one of the sectors that was hit hardest by the COVID-19 pandemic. According to the American Hotel and Lodging Association, the industry lost more than $46 billion in revenue in 2020 and nearly 4 million jobs. However, thanks to several factors, the industry is showing signs of recovery and optimism for the future. One of the main drivers of the hotel industry's recovery is the pent-up demand for travel. After months of lockdowns, restrictions and cancellations, many people are eager to resume their travel plans or make new ones. A survey by McKinsey found that 80% of U.S. consumers miss traveling and 55% plan to travel more after the pandemic than before. This indicates a strong desire to reconnect with family, friends, and new experiences. Another factor that is boosting the hotel industry's recovery is the delayed trips that were postponed or rescheduled due to the pandemic. Many travelers who had booked their trips in advance chose to defer them instead of canceling them, creating a backlog of bookings that are now being redeemed. For example, Forbes reported that summer reservation volume for short-term rentals in the U.S. was 110% higher in 2021 than in. This suggests that many travelers are making up for lost time and taking advantage of flexible cancellation policies. A third factor that is contributing to the hotel industry's recovery is the increased consumer savings that resulted from reduced spending during the pandemic. According to the U.S. Bureau of Economic Analysis, the personal saving rate reached a record high of 33.7% in April 2020 and remained above 10% until June. This means that many consumers have accumulated extra cash that they can use for discretionary spending, such as travel and leisure. A survey by Deloitte found that 42% of U.S. consumers plan to spend more on travel in 2021 than in. These factors, combined with the widespread availability of vaccines and health protocols, are creating a favorable environment for the hotel industry to bounce back from the pandemic. However, the recovery is not uniform across all segments and regions. Luxury and upper upscale hotels are expected to recover slower than economy and mid-scale hotels, due to their dependence on international and business travel. Similarly, urban and coastal markets are expected to recover slower than rural and mountain markets, due to their exposure to COVID-19 cases and restrictions. The hotel industry has faced many challenges and uncertainties due to the COVID-19 pandemic, but it has also demonstrated its resilience and adaptability. By catering to the changing needs and preferences of travelers, such as contactless services, enhanced hygiene and flexible policies, the industry can regain its momentum and thrive in the post-pandemic era. Marriott and Hilton are two of the leading hotel brands in the world. They are both expanding their hotel portfolios, especially in fast-growing markets such as China, India, and Africa. In this section, we will look at how they are doing that and why. Marriott International has more than 475 hotels across more than 130 destinations in Greater China. It plans to add 47 more hotels in 2023, bringing its total to more than 500 properties in the region. Marriott's strategy is to match its 30 iconic brands with different destinations, offering guests a variety of choices and experiences. For example, Marriott will debut Risai Valley, a Ritz-Carlton Reserve, in the historic Chinese valley of Zhuhaigu in Sichuan province. This will be an exclusive sanctuary with 87 private villas and immersive experiences rooted in the local culture and nature. Marriott will also open W Macau, Studio City, featuring a W Sound Suite, a signature on-site recording studio for music lovers. Marriott's expansion in Greater China is fueled by the strong demand for its select service accommodations in emerging destinations. It expects to add 30 hotels in this segment by the end of 2023, including Fairfield by Marriott, Courtyard by Marriott and 4 Points by Sheraton. Hilton is also growing its presence in China, with more than 300 hotels operating or under development. Hilton made a deal with Chinese developer Country Garden in 2020 to open more than 1,000 Home2 Suites in China. Home2 Suites is a brand that offers spacious suites with kitchens and flexible living areas for extended stays. Hilton also plans to open more properties under its luxury and lifestyle brands, such as Waldorf Astoria, Conrad and Canopy. Hilton sees China as a key market for its future growth, as it expects the country to become the world's largest travel market. By both Marriott and Hilton are also expanding their hotel portfolios in India and Africa, two other fast-growing markets for travel and tourism. Marriott has more than 130 hotels across 70 destinations in India. It plans to open more than 20 hotels in 2023, including JW Marriott Hotel Jaipur Resort and Spa, the Ritz-Carlton Mumbai and the Westin Goa. Hilton has more than 20 hotels across 15 cities in India. It plans to open more than 10 hotels in 2023, including Hilton Garden in Lucknow Gomtinagar, Doubletree by Hilton Ahmedabad SG Highway and Conrad Bengaluru Whitefield. In Africa, Marriott has more than 170 hotels across 25 countries. It plans to open more than 10 hotels in 2023, including Sheraton Kampala Hotel in Uganda, 4 Points by Sheraton Nairobi Airport in Kenya and Protea Hotel by Marriott Accra Kotoka Airport in Ghana. Hilton has more than 50 hotels across 17 countries in Africa. It plans to open more than 5 hotels in 2023, including Hilton Garden in Mbabane in Eswatini, Hilton Algiers Bab Ezuar in Algeria and Hilton Garden in Lusaka Society Business Park in Zambia. By expanding their hotel portfolios in these markets, Marriott and Hilton are aiming to capture the growing demand for travel and hospitality from both domestic and international travelers. They are also offering diverse and distinctive experiences to their guests, catering to their different needs and preferences. Marriott and Hilton are fighting for the long-term travel market by investing in their brands and destinations.